All right, traders, let's talk why the market just hasn't been the best to trade these past few weeks. Now, objectively, maybe you made some money, maybe I know I made some money past week, but it's just not ideal. You kind of want to play defense recently, and a lot of you are frustrated with the choppy price action, the fake outs, the lack of clear trend, and there's a reason for it, right? Actually, there's multiple reasons backed by some hard data, seasonality, and even macro events. So let me just break it down for you real quick, okay? So first, let's look at the history of, let's say, the Nasdaq, right? August and September are statistically the worst month of the year for equities and futures, right? Like since 1928, the S&P 500 has averaged around a minus 1.1 to minus 1.2% in September, the only month with consistent negative returns, okay? August isn't much better as well in US post-election years like in like this year or even maybe next year. August is actually the worst month for the Dow and the second worst for the S&P and the Nasdaq, right? So the numbers alone kind of tell you that these months are stacked against the trend, which is usually to move up when it comes to indices, right? And it's not just stocks, obviously. Forex traders, they know this pain too, right? Historically, the yen kind of strengthens in August in about like maybe 70 to 80% of the years. That means the USD JPY, GBP JPY, and Euro JPY often kind of fall in late summer. And those pairs are kind of known to go up as well, right? The GBP JPY or the GBP USD has its worst month in August as well, averaging usually around a 0.5% return. Euro USD often peaks early August as well, drops into September, and then kind of recovers later, which is exactly what it did this year too, right? So if you've been seeing some weird reversals in currency pairs, it's not just random; it's kind of seasonal flow, right? So now let's talk about why these there are like a few key drivers. So the summer doldrums is basically big money's on vacation, desk run with literally skeleton crews basically, right? So liquidity kind of dries up. That means random spikes, false breakouts, traps. There's basically low volume, right? There's a bit of an earnings lull as well. Q2, which is the year separating four Qs, just Q1, Q2, Q3, Q4. They're all 3 months. Q2 earnings are done by July, and Q3 results don't come out until October. So August and September are kind of like a news desert, right? No big catalyst to drive the market higher. There's also the Fed, right? In late August, there's Jackson Hole Symposium. And September is usually a key policy month as well. Markets hate uncertainty, right? And with thin liquidity and any hint from Powell can kind of cause like a crazy move, an exaggerating move, teleporting candles, stuff like that, right? There's also other risks, obviously, government shutdown battles, global flare ups, even hurricane seasons can affect the market, right? Historically, late summer is when external shocks hit the hardest when it comes to stock market. Um, from an ICT and smart money concept angle, this is exactly why even the best traders kind of step back and they play some defense. ICT literally tells its students every year, August should be light, don't force it. Why? Because low liquidity equals high manipulation. Market makers know stops are sitting above highs, below lows, and in August, it's way easier for them to engineer those stop runs, right? They push price into liquidity, they trigger your stops, they reverse it. Classic inducement. Okay. You'll see fake breakouts, sudden spikes, then the real move after retail is trapped. That's a market maker model in action, right? Accumulation, manipulation, distribution, right? And August is basically one long manipulation phase, which is why it's a little harder to catch that distribution. So what should you do, right? Treat trading like sports. There's a time to play defense and a time to play offense. August and September, play defense. Trade less, cut size, focus on protecting capital. If you're trading, stick to liquidity grabs, quick plays, maybe internal liquidity, stuff like that. Offense month, October through May. Honestly, realistically, January, February, I don't like, but October, we'll say for sake of this video, October through May, historically, that's when the market trends the best. November, December, and January are kind of the strongest months for equity when it comes to growth. Doesn't mean they're super easy to trade, but for the growth, liquidity comes back, earning season kicks in, and kind of the real moves happen. And that is when you can press your advantage and kind of like let trades run for like external take profits and stuff. So if you've been frustrating in August and September, don't beat yourself up, right? the odds are stacked against you. Even pros go into defensive mode. I know a lot of people that don't even trade during the summer. The key is knowing when to stand down and when to strike, right? Protect your capital now, because the real opportunities, they're right around the corner in October. So remember, sometimes the best trade is no trade. Stay patient, stay disciplined, and align yourself with the seasonal edge, right? Again, I'm not saying that action's been so bad you need to not trade. You can look at it, but if you come into the market and it's not as clear as it should be, do not take a trade. It's as simple as that. If you guys like comments, if you guys like the video, please like, comment, subscribe. If you want to see more from me, and I'll catch you guys in the next one.